Hey, good morning, everyone. Hope you're all doing well. It is Thursday, November 14th today, and there is some news to look at this morning. Nothing too crazy, as we're in a pretty sideways, range bound, choppy environment. A lot of this is due in part to the we had some more inflation data, but mainly we have OPEX expiration for the month of November this week on Friday here. We're going to get some of those monthly expirations in options. So we're seeing a little more sideways movement that's dragging along these last few days here. And we had some more inflation data this morning, the PPI. Yesterday we talked about CPI. CPI came out slightly around expected, maybe a touch hotter, but prices did end up rallying. Excuse me. And from the PPI data this morning, we got a little bit of a pullback to the downside, and we're still holding inside of a major balance on both these indices. Now, what we got from the PPI, we had the US PPI, the year over year. The prior was 1.8%, and the forecast was 2.3. So both the CPI and the PPI were expected to be slightly hotter, and it came out at 2.4, so a hotter print there. The US PPI month over month, last month was 0%. This time, excuse me, this time was expected at 0.2%, and it came out at 0.2%. The U.S. core PPI year over year, 2.8 last time, 3% expected, 3.1 came out a little hotter than expected. And then the U.S. core PPI month over month, 0.3 compared to the 0.2 expected, so again a little hotter. And the U.S. initial jobless claims came out slightly lower than expectation, 215,000. 217,000 contracts. 217,000 versus 220,000. Sorry, all over the place this morning. And in terms of some of the news, we do have a lot of Fed speakers that are coming out, right? We have this morning we had Fed's Kugler. We have now Fed's Barkin is speaking, and then we have Jerome Powell's economic outlook today at 3 p.m. Eastern time, and then Fed's Williams at 4:45 p.m. So decent amount of Fed speakers. Jerome Powell is coming on the wire as well later on in the day towards the close. So uh, we're probably not going to see like crazy movement today and tomorrow especially. So sorry about that. So newer traders on these weeks, just be a little more careful. And we have more news out of sanctions, right? So the West, collectively with the EU and the US, are set to impose thousands of sanctions against Russia since the invasion of Ukraine in February 2022. So it's been a very long time since. It has led Russia to become the most sanctioned country in the world, and while that has caused considerable damage to parts of its economy, it has overall been resilient, with GDP growth expanding in the past quarter by 3.1% year over year, and the restrictions cover thousands of individuals and regime linked people, but the ones that make the headlines have been leveled against key entities or sectors or roping of Russia from supply chains and financial systems. So there had been expectations that the sanctions would impose key vulnerabilities in the Russian economy, but it has proven hard for a country that is self-reliant on its food and energy. Stopping the outflow of capital has also boosted domestic investment and prompted the nation to expand its circle of friends, especially with the world's factory and economic powerhouse, China. So Russia has additionally found big consumers to whom it can export commodities like oil, such as India, which is a key country that has abundant natural resources. And don't forget the shadow economy, which envelops entire industries and sectors. Western goods and replacement parts have been flowing into Russia from third countries, as documented by the exponential increase in imports to Moscow's immediate neighbors. And add to that smuggling routes, transit points, dark fleets, and reflagging of tankers, doctored documents, and money laundering, which can all keep goods and trade flowing, especially through third-party markets. One of the earliest threats leveled against Russia in the early days of the war was aimed at severing its financial ties, including SWIFT payments and the system. However, alternatives have surfaced with a plan towards de-dollarization as well as boosting cooperation among the BRICS economic organization, and the New Development Bank to counter Western institutions. So this week, Russia and Iran even formally linked their Mir and Shatab banking systems, which will make it easier to facilitate trade and conduct transactions. So interesting. So we'll see how that shapes up. We also have the Bitcoin and crypto rally continues here. A lot of people are suggesting it's Trump fueled. We also have Feds Kashkari, once a Bitcoin skeptic, is now with an open mind. So a lot of people are coming around with the, I guess, United States wanting to be a powerhouse in Bitcoin and the crypto world. So let's take a look at what's going on in terms of these equity markets. I have a question here. Question regarding your trading. How long will it take to complete if I have 2 hours per week and I'm a quick learner? It's an interesting question. Like generally a month to 2 months to probably go over all the resources that we have in terms of the coursework at TRADEPRO. So that's kind of a general timeline I can give you. Now, obviously, like there is the factor of like practice and like going through these individual steps. Also, our live trading room. So I don't know. General consensus probably a month to 2 month, if I'm being honest. Yeah, just in the morning I like cough a lot. ICT said that he would delete his YouTube if Bitcoin hit 100. Well, it's almost there, isn't it? Let's see if that's true. Nothing he says is facts. He just yaps. Just engagement bait. Where are we at on Bitcoin? Yesterday we hit like 92K. 93. Whoa, almost 94. Wow. We're almost there. So let's take a look at this U.S. equity market here. Range bound. Range bound. This is the case and the situation for these markets this week. As we mentioned before, what I'm looking at is some bearish pressure, realistically, but the failure to accept into auctions lower, especially on the S&P, is showing the resilience of this range, which is like fine, I guess, and most likely expected like even through tomorrow going into the weekend, because we do have the OPEX that comes out. So let's see what we get. Realistically, these mid 60-30s on the S&P are a massive point of resistance. We have these like low auction failures around that 6,000 area. So it's pretty pinned between 6,000 and like 60-35, let's say. We have the auction low at like 59, 88, 86. So honestly, I am leaning a little more bearish to see if we can actually break through that 6,000 and even lower. We keep failing at that 60-35, right, as Paul is mentioning in the chat. 100% agree. Like yesterday I was looking at that as a major resistance and turning point to see if we can get some sell side. The overnight didn't really do too much damage on the sell. We did get like a fake move to the downside with this like low volume kind of spike. But I am still leaning a little more to the sell to see if we can actually break below. But we're getting kind of the failure on both ends right now. We had this Sunday move over here that failed, and we started moving back into the auction. So that's where my bearishness came from. But right now, like if we can't necessarily break even lower, we could see that expansion higher. I immediately am bearish under this like 60-35, but I have to be cautious going into it because I need to see prices below that 6,000. That's kind of where I'm at, and just like we're trading a balance right now, so I don't think there's that many trades coming up today until we get more of an expansion, where I think a lot of people are probably waiting for that. They're probably tired of trading this range. First 2 days of like range movement, okay, fine, whatever. But like as it keeps going and going and going, you start to get weary and tired that like, oh, okay, which side is going to break? So we'll see what the imbalances look like and what the like big market selling and buying looks like. But right now there is more sell pressure, I would argue. But we do need to see that expansion lower if we're going to get any kind of continuation. That's just a fact. So let's open up our live room, see what we get in terms of today's trading day, and we'll see how this thing shapes up. So thank you, everyone. We'll see you guys tomorrow.